I tend to say that markets evolve per cycle, meaning if you look at what the market has been doing since 2020, let's just go back to 2019, so that it will make more sense. So 2019 market was up there. Everybody was, there was money flowing, economy was, growing, people were finding jobs, low employment, etc., etc. We were at the highest we've been in the last 5 years. And then boom, black swan event, meaning unexpected event out of the blue. Pandemic came, boom, everything crashed down 70, 80%, even 90% for some stocks. But after that, boom, literally 3 months after, the market was already recovering. And since then, it has been on an uptrend for the next 2 years. And here we are in 2022, and the market has tanked a little bit. And because we have geopolitical unrest, because we have high inflation, the market is now, people don't know. People don't really know what to expect. People may expect a recession, meaning the economy is going to slow down, which, by the way, is not synonym to, doesn't translate automatically or necessarily into stock market going down, or retail or real estate market going down. It just means that the amount of growth that we have for the last quarters are not going to be sustained in these quarters. And it does have a pretty good rationale behind it. If you only take the Ukraine conflict, that alone is enough to sustain a recession. But when economies, or when the stock market goes full bull mode, at some point it has to cool down. Otherwise, it's gonna create unnecessary consequences, unwanted consequences. Inflation is one of those, all right? Because in order to fight inflation, you have to do something that will kill or push the economy to slow down, push people to stop spending money. And that's why a lot of people are talking about stagflation. But that's going to be another video, and I already made some videos on if we're going to go into a stock market crash or if we're going to head into a recession, etc., etc. But now I want to share with you, based on what is going around and what might be happening. It doesn't matter if it's a stagflation, meaning the economy doesn't grow and doesn't slow down, or the economy continue to slow down. And even if we have a crash or no, what am I doing and why am I holding so much cash? Because of the markets, the economy evolve in cycle. We cannot go up and up and up and up and up for the next 5 years, especially at the trend we've been going since 2020. Or we cannot go down and down and down and down and down, without any floor, anywhere to stop and rebound. So based on where we are right now in this cycle moment, I think it will be smart to start putting some cash away. Number one reason behind it is if you let it sit in a savings account, first of all, if you haven't paid attention to, but mortgage rates have increased because interest rates are increasing or are set to increase. But savings rates are still not budging. Why? Because banks don't really need to get your cash in order to be secure. Based on what they were forced to do back in 2020, when I'm talking about the reserves, they already have billions of dollars of reserves stored there. All right. Now, if the economy doesn't slow down as much as people intend it to happen, then people are going to still need to get loans, business loans, in order to, grow their companies, or companies are going to, take money in order to invest in their own growth, hiring people, et cetera, or people are going to take more mortgage. But if that doesn't happen, then it's very unlikely that the interest rates on savings, especially high savings accounts, are going to change that much. So it doesn't make sense for me to keep my money into a savings account in the form of a cash. Now, I would rather invest it, but because we don't know yet, it's not clear enough what is going to happen. Is the crash going to happen? Whether it's the stock market or the real estate market, nobody knows for sure, even though we have these indication signs. So in order to prepare, the best way to prepare is to have as much cash as possible. And the number one reason, which leads me to the number one reason, which is the more cash you have, the better opportunities you can take advantage of. I mean, think about 2008 or even 2020. If in 2008, as the market crashed, houses were selling for 10 cents on the dollar, meaning you can buy a 300,000 house for 100K or even less than that. Can you imagine? Can you imagine how rich you will be if you bought only 2 of those houses? But people who had cash then were then able to scoop up as much as they could. 5 years, 10 years down the road, those same houses are now worth $1 million. So go back to 2020 when the stock market crashed. All right. Having cash gives you the ability to take advantages of 25, 30, 40, even 60, even 90% deals that are presenting in this kind of environment. And that's why I think we need to pay attention to it. And that's why I'm, putting as much cash as possible, even though it doesn't change my long-term investing plan. Maybe I'm going to dig deeper into that, into some other videos that I'm going to drop later this week, into how to make sure you have your short-term, medium-term, and long-term investments set up without having to be disrupted in the case of something, presenting itself as a market crash where you need to actually get advantage of that. All right. So that's, the two reasons why I think I need to put as much cash away as possible, because in these type of deals that may present themselves, in the case of at least the real estate market dropping, man, that's how wealth is built, by seizing opportunities that happen maybe every 5 or 10 years. Because it doesn't make sense for you to be sitting on cash, because that cash will even get eaten by inflation. Why? Because $1 today is not worth the same amount of dollar tomorrow or next year or 10 years ago. Why? Because inflation tends to grow. That's exactly what we're living now. So I would rather have my money eaten by inflation, losing 8%. That's the cost of inflation, because in the next 3 months or the next year or so, I may get advantage of a 40% deal on a house, or maybe a 60% deal on the stock market. So let me know what you think in the comment section, and I will see you in the next video.